Hi, and welcome to another edition of TraderCast's Daily Market Report. We are looking at Wall Street or Dow Jones in 4-hourly time frame. We can see that obviously the price pulled back quite heavily during the past few days, last week, and currently it's consolidating in some kind of form which could become either a bear flag or a rising wedge, or maybe a ascending triangle or symmetrical triangle of some sort. Logical support is at 17,664. Only a loss of that level and a red candle closing below that initial support zone or a point of control zone in a 4-hourly or end of day time frame could potentially open up the way for the retest of further downside supports towards 17,581, followed by 17,478, 17,479. This is a really significant support, purely because this is relating to a 200-day EMA level as well. So the first touch of that level would probably be respected as a significant support, or we might see a small consolidation or some profit taking for anybody who's looking for a short setups. The other alternative is either a pullback into this support zone, or maybe a rally from the current levels into 17,750 resistance could potentially open up the way for the further upside resistance towards 17,820, followed by 17,907 and 17,994. This is FTSE in 4-hourly time frame as well. Obviously, we can see that FTSE pulled back heavily as well. Current support based on a closing of these 4-hourly candles, it's at 68.55. Then there's this kind of support zone here, 200 EMA, and also a cluster of these kind of intraday lows, which are signified by the lows of the wick at 68.39. Only a loss of these significant supports and a red candle closing below in end of day or a 4-hourly time frame could potentially open up the way for the retest of further downside support with 67.89, 67.90, followed by these two lows here at 67.20 or 67.6700, purely because it's a nice and round number. The other alternative is if we see some oversold bounce backs. The initial resistance is located here, this cluster of the previous highs, and also this 50-period EMA in 4-hourly at 69.20, followed by 69.53 and 69.79. Euro dollar, obviously we see that this is some kind of a sideways channeling trading range, which does appear to be a bear flag from a longer term perspective. So weekly and daily would see this as a bear flag. And the loss of this current support in the sequence of lower highs and the retest of that rising support trend line, and also moving averages from underneath and some rejection, is quite significant. But this is obviously influenced by what's happening with Federal Reserve and Janet Yellen's speech and all sorts of other stuff. So the levels that everybody's keeping an eye on are fairly straightforward. A current a level of support is where this 20-period moving averages, and also very close to this intraday high at 108.90. Breakout above that would negate this as a false loss of support and basically a bear trap, and then in that case 109.53 followed by 110.16 and 110.50 would offer some resistance on the upside. The other alternative is either rejection at those levels or sell-off from the current levels could potentially open up the way for the retest of 108.01 as a logical downside support, followed by 106.90 and 106.44. Gold, very similar to euro dollar, we saw a massive reversal and a breakout as well. Pullback in dollar index, and obviously some geopolitical risk, obviously Saudis and Yemen and some tensions caused this kind of a spike higher. Nevertheless, gold is still in a clearly defined bear trend or downtrend from a longer term perspective, so weekly, daily, and so on. This is a 4-hourly time frame. Levels that everybody's keeping an eye on are fairly straightforward. 1192 support. It's the bottom of this a bull flag. This appears to be a bull flag. So 1192 half, followed by 1185, followed by 1175, followed by 1170. All of these levels would also offer some buying opportunities for anybody who's sitting in a bullish camp, because they would see this as a breakout and then a retest of this previous resistance, now newly found support. The other alternative is either a pullback into one of these levels and a rally from here, or maybe a breakout and a rally from the current levels. Could potentially target 1207 followed by 1225 and 1244 as a logical upside resistances, and those would also be seen as a logical profit taking areas for anybody who's sitting in a bullish camp as well. Hopefully you've enjoyed this short analysis, and I'll talk to you all next week.